The dollar has lost 85% against gold since 2000. That destruction of the currencies is going to accelerate in the next few years, Patrick. It's going to be mayhem, absolute mayhem.
Please join us for our next live stream, Sunday, April 11th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, April 11th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. As always, if you are new to our channel or if you haven't already done so, please do subscribe, hit the bell to be notified of new updates, and give us a thumbs up if you like what we do. We truly do appreciate your support. Egon von Greyerz joins us today. Egon is the president of Matterhorn Asset Management and the founder, principal, and managing partner of the wealth preservation company Gold Switzerland. Based in Zurich, Egon is a well-known gold and silver expert and widely respected in the industry for his world economy analysis and risk analysis. And he has also authored scores of notable articles, including The Dark Years Are Here in 2011. And we are delighted to have Egon here as a return guest. It's time to saddle up and silver up for Egon von Greyerz. Egon, welcome back to SBTV. How are you doing?
Patrick, good to see you again. I'm fine, thank you. But there were strange times, it's this isolation and lockdown we're seeing all around Europe. It's horrible, it's bad for people, bad for business. At the same time, this is a vicious disease, and a lot of people die, and Germany's locked down, France is locked down, Switzerland is not locked down, but like half lockdown. I mean, I spend a lot of time here in Zermatt, for example, where the Matterhorn is behind me. I mean, this is the view I have, although this is a virtual picture actually, but this is the view I have from here, and we have this beautiful weather every day, more or less. So, that compensates for not being able to see people, meet people, and travel, etc. So, yeah, very, very strange times, and but at least a country like the UK is now showing the way with more than 50% being vaccinated, and actually, is coming down quickly the number of cases. So also with lockdown, of course, but let's hope that is the way, so we can get out of this at some point during this year.
Yeah, let's hope so. That was going to be my first question. You rolled right into it, where we were looking to get a European perspective on what's going on, whether, do people feel like this is for the greater good, or do some people feel like, this is an infringement upon personal liberties?
Well, it's such a difficult balance, this. I mean, I understand every government in the world is criticized for their management of COVID. But, this is something totally unknown, and nobody knows. Every government tries different things, and most of the things don't work, and they have lockdown for a while, and then they open it up, and then it starts all over again. Sweden has been, for example, which is my other home country, has been totally liberal. People could do what they want, more or less, and that worked for a while. But now all of a sudden they have more cases than ever. And I had one of my very, very dearest friends who died yesterday in COVID. So it is a vicious disease, and you don't know how to deal with it. So you can't. It's easy to criticize governments when you're all right yourself, but all of a sudden now, for example, younger people are getting it in many countries, which wasn't the case before. I think I don't want to discuss the vaccine, the pros and the cons, but clearly, if you look at the UK, it's having an effect, and I hope, as I said, that we are going to get out of this. But it changes the lives of everybody, and people, of course, get depressed also. This loneliness and this isolation, it's not good, and the alternative of opening up everything hasn't worked either. So very, very difficult situation.
We'd like to send our condolences to you and your friend and their family as well. Another friend or colleague of yours, Matt Piepenberg, recently wrote that in sum, when it comes to central bank accommodation, lockdown measures, yield manipulations, or rapid-fire vaccines, it's at least plausible to wonder if certain policy cures are indeed worse than the global disease. Now, are we seeing a scenario where the responses of the pandemic might be worse than the pandemic itself? And I know we just touched on this, but I guess looking at it from maybe a broader perspective, or because of really what's going on with the economy.
Well, we're back to what we discussed at the beginning. Governments don't know what to do. The problem is, so disease we already discussed. What about now the economic policies and the accommodation of unlimited money and interest rate, the manipulation of rates, etc. Well, I have always said, Patrick, that the problems we're seeing in financial markets now started in this phase in August, September 2019. This is when central banks panicked and started with QE and all forms of money printing at an accelerated rate, the Fed, the ECB, etc. And so there were, at that time, they basically said that we will print as much as is necessary to accommodate a banking system which is under massive pressure. And therefore, really, COVID was just another catalyst that actually exacerbated the situation rather than being the cause of the situation. So money printing has been going on for a while already before that at a high rate. And now, as I said, it's obviously every government is printing basically whatever is required. And now, the US had a 1.9 trillion package, Biden, and now they're talking about another 4 trillion package with infrastructure, etc. So, it never ends. Of course, the world can't afford this. Of course, there isn't any money. And of course, the money that creates has zero value. Absolutely. When you print a piece of paper or press a button and create trillions out of nothing, that obviously will have massive effects on the currency and on the financial system. We haven't seen that yet, but that's still to come. And this is what I'm writing about and talking about all the time. You just take, I don't know if you get onto that, but as an example of the problems in the banking system, look at now this hedge fund in the US, Archegos, that out of the blue last weekend lost $30 billion. And who facilitated that? Well, obviously the banks, so they have these prime brokerage lines with the major banks. They had several banks like everybody has, but they had, of course, they had Credit Suisse and they had Nomura. And, these banks, they're not controlling the risk at all. You take Credit Suisse. I have been critical of the financial system as the whole, but also even in my own country, Swiss banks. Switzerland used to be a bastion of security and calm and prudence. Well, it's not anymore. They're just as wild as any investment bank. And Credit Suisse has lost billions after billions on various deals. And this is Switzerland. I don't trust the banking system. I've said that. I wouldn't keep major amounts in the banking system. Of course, the whole world circles around the banking system. So I understand that we need it, but at the same time, as an investor and from a wealth preservation point of view, these banks, and I'm taking Credit Suisse as an example. All banks have these problems, but Credit Suisse, this is one after the other now. So they had obviously, as I said, this Archegos hedge fund where obviously they will lose a part of that 30 billion, whatever it is. They talk about 3 billion now, nobody knows. And it came out of the blue. Of course, the management and the board, nobody knows what's happening. The risk control isn't there. And of course, before that, they had this Greensill Capital where they also will lose 3 billion or so, Credit Suisse. And before that, they had York Capital, another hedge fund, where they will lose 500 million, etc., etc. And I've said about, and I'm taking Switzerland as an example, but it's all around the world. The Swiss banking system is too big for the country. The Swiss banking system is about 5 times GDP. And that is unacceptable size if something happens to the Swiss banks. And the same with the Swiss National Bank. Swiss National Bank, is a hedge fund. They speculate primarily in currencies in order to weaken the Swiss franc and strengthen the euro, but that becomes a massive currency position, which is bigger than the Swiss GDP. It's about 120% of Swiss GDP. I mean, that's just ludicrous also. So what I'm saying is, so that's Switzerland as one example. And Switzerland is there's a well-managed country from the point of view of finances. There are virtually no budget deficits, debts are low, etc. But the banking system is too big for the country. And that, but I'm not criticizing just Switzerland, because all banks are in a similar position. But it's just that in relation to the size of Switzerland, this is just too big. And that's why I'm telling people, be careful what you keep in the banking system. That's not just cash, that's stocks, etc., because you have the custody problems and the counterparty problems, etc. So, this is why we've been preaching about wealth preservation. Now, I've been, also, this, if you take this Archegos that lost 30 billion, virtually all of the trading for hedge funds is in derivatives. It's not in the actual instruments. And the real derivative amount outstanding is something like 1.5 quadrillion. The way I look at it, probably more. It's only that the BIS from one day to the next reduced the figure from the quadrillions to 600 trillion, but that's not the real figure in my view. So you're talking about a time bomb there, and you could see that one weekend just 30 billion basically goes up in air, disappears, and that's with one little company which basically was unknown, this Archegos, and then you can see what can happen when there is a contagion, and that's the risk we are facing now, and that's why investors must be so careful, Patrick.
Yeah, it's a great point, Egon. The ECB and Christine Lagarde, we've seen that they have pretty much chosen to try to inflate debt away with all the money printing that we just touched on. They're looking to repress yields, or in their words, closely monitor yields. Are yield curve controls or compressed yields bringing in negative real interest rates, and shouldn't that be good for gold?
Well, as you know, what is important for gold is not the level of interest rate, but the level of negative real rates. It's all about negative real rates. I have had a long business life, and I was in the 70s. I experienced the whole of the 70s, and I was in the late 60s and early 70s. I was in Switzerland in banking, and then in the rest of the 70s I was in the UK and experienced about 15 to 17% inflation over a 7-8 year period. And of course, I've often pointed out that my first mortgage was 21% in the UK in the early 70s. But real interest rates were negative, i.e. inflation was higher than the interest rates. And that's really the thing that is beneficial for gold. So as long as as I said, the inflation is higher than interest rates, so you get negative real rates, then that's the best climate for gold. Now, gold can prosper in other situations too, but that is generally a very important factor. And that's what we're going to see now too. We know, for example, inflation is not 1-2% that everybody's reporting now. Real inflation is 5-10% or more. If you look at consumer prices and really what's happening in the real world, it's not what governments report. Governments like to take the American government. They changed the calculation of inflation already in the mid 80s and changed it to a system that suited them. Because governments don't like reporting high inflation. It means bad management, first of all, and it also means that anything that's indexed, pensions, etc., have to go up by more than they would like. But now they're in a situation. I'm totally against manipulating interest rates. Remember that is this is a vicious circle. The low interest rates then facilitates unlimited lending. You can borrow. I'll take Switzerland as an example again. 15-year mortgage at fixed rate of 1%. And in most countries in Europe, you can borrow at 1% more or less for that's ridiculous. So what do we have? We have maximum demand for credit and minimum interest rates. Doesn't add up. That's not a free market. If you have high demand for credit, that means that the cost of credit will go up dramatically. But this is not a real market. This is a fake manipulated market where governments just create unlimited amounts of money and as I said, manipulate rates down. And then they themselves, of course, borrow amounts of money, which are crazy. Just look at the US. In 1981, when Reagan became president, US debt was under 1 trillion, just under 1 trillion. Now, in one of my latest newsletters, I talk about the forecast for that until into 2025, and we're looking at. I had forecast already when Trump came into power that the debt would be 40 trillion in 2025. The way they're spending now, it looks like it's going to be 50 trillion. So you've gone from just under 1 trillion with Reagan in 1981 to in 25. 50 trillion. That's what it looks like. It could be more because that doesn't include any disasters in the financial system or anything. And that's just incredible. I calculated that's a capital, that's a compound annual growth rate of 28% over a 40-year period. This is just unreal. So, it isn't working. This whole thing, it's a con, basically, because you're just printing money, because governments need so much money and print so much money that they can't afford to pay for it. So therefore they set the rates at zero or even negative, and then they print more money. It's fantastic. What a party. You just, this is better than Shangri-La. You just print and print, and you live above your means. But this is a bubble that will, if money if you can print it at no cost, it means it has zero value, and that zero value money for a while has a value, and then assets are bought for it, stocks and property, etc. But then you take out, people measure their assets in their home currencies. So the Americans measure it in dollars, for example. But when they look at their gains, let's say in this century from 2000. They've got to take off what actually has happened to the dollars from their gains. So the US dollar is in real terms, and you and we measure real terms in gold, of course. And in real terms, the dollar has lost 85% against gold in this century. And this century since 2000, the last 21 years. And so that means that anybody who calculates what they actually made should take off 85% of their gains. Nobody does, of course. Sounds much better if you calculate whatever you have in an inflated currency, which is actually coming down by the day. And that's what we're going to see in the next few years. I think, let's say the next 5, 7, 8 years, gold is going to start reflecting this, and silver, of course, also even faster. You're going to reflect this total destruction of currencies that has been continuous since 1971. And we know, very few people know that most currencies have lost 97 to 99% against gold since 1971, when the gold window was closed by Nixon. That destruction of the currencies is going to accelerate in the next few years, Patrick. It's going to be mayhem, absolute mayhem. And of course, you can only fool the people, or most of the people, some of the time. But all of a sudden, this is going to be revealed. The sheer weight of money is going to just crash down on the world. And I've always said that interest rate, the bond market is actually the key to this, and that's the biggest bubble of them all. And the central banks short term are managing to hold interest rates down. I think what we're seeing now, which I have been forecasting, that the long rates will be the ones that move up first, because it's harder for them to control the long rates and the loan bonds than the short term rates. And we've seen now, like the 10-year US Treasury going from 0.5% last year to now 1.75%. I think, sure, there'll be some corrections on the way, but this is going to happen. Long rates will go up faster, and then they will pull the short rates up with them, and then at the same time we'll have inflation, and governments will lose control of interest rates. I'm absolutely convinced. It's only a question of how long will it take, Patrick.
Yeah, so we'll see rates just rise all across the board then.
Yeah, absolutely.
Okay.
Yeah, it doesn't happen overnight, and they're going to fight and fight, and they're going to print money, more money, and more money. But they're actually just exacerbating the problem, so that's not going to have any effect. On the contrary, it will just make the situation worse. As we both know, you can't solve a debt problem with more debt. That's not possible.
Speaking of that, global debt has since the 2000s more or less doubled, and we're currently seeing currency debasement with all this money printing. You've said that to face a debt problem by issuing more debt via the monetization of debt is insanity. And here we are. Have central banks, governments, politicians reached that point of insanity? And how do we, the people, you and me and the rest of the people watching, avoid their insanity of what they look to do?
Of course, it is insanity. But you see, the people who actually control this have a vested interest in making insanity greater, because it all suits them to keep this all going, floating at a level that will be uncontrollable, as I said. But nevertheless, in the meantime, the wealthy are getting wealthier, the bankers are earning money, governments are kept in power, and so for the top 1%, this insanity is wonderful, until it all of course collapses. And I think this hedge fund that we started with, this Archegos, that is a sign of things to come. Because so coming back to the financial system, and the derivatives is the biggest part of that. Bonds are important, but derivatives is derivatives have been an incredible instrument for banks, an absolute money spinner, because when the market goes up and prices go up, derivatives, they're just selling and selling, making money the whole time on derivatives. The thing is, it works very well when there's liquidity and prices go up. But when all of a sudden people want to start to liquidate derivatives, there won't be any market, and that's when that it will implode. So this is a totally the whole world is financed on fake premises, and we are going to see the result of that in the coming years. So coming back to your question, so what do people do about that? Of course, most people are not aware. You believe and we believe that wealth preservation is absolutely critical now, and therefore people should protect themselves. So far, stocks and bonds and property have been good assets, have been growing well, but stocks now are the bubble is now coming to an end in stocks, in my view. And we are very near a secular turn in stocks, much worse than in 2000. And we talk about more like 1929, but the 29, the Dow went down 90% between 29 and 32, but then it took 25 years for the market to recover. So you're talking about now, in 29, the debt bubble was nowhere near as great as it is today. So we're going to see at some point an implosion of these bubble assets, and that is everything that's been financed by fake money, which is stocks, bonds, property, in my view, also. So there are very few things to flee to, if you want, now, because everything is a bubble. But of course, commodities, we see that commodity prices have already started going up dramatically since last year, especially, for example, food prices, and that will continue. So commodities are going to be strong. Now, we believe, of course, what your company does and our company does is helping people to preserve their wealth with precious metals. we believe that the precious metals will be major beneficiaries of what is coming, i.e. the collapse of the currencies and the implosion of financial markets. And therefore, wealth preservation in the form of gold or silver stored outside the banking system, we think is a very important way to protect your wealth. Sadly, if you look at gold, there's only today 0.5% of world financial assets in physical gold. 0.5%, Patrick, that's nothing. So what we are saying and we are doing, very few people are even aware of, and even fewer are doing something about it. That's going to change. We're going to see a massive transfer of capital and wealth into wealth preservation investments like commodities and like real assets and like gold and silver. That's going to come, but that will still be such a narrow little industry, and that there is that can't swallow all that capital that's coming in. On top of that, you will obviously have the problems with the futures markets and the LBMA and the bullion banks, which have issued amounts of silver and gold paper in quantities that means that they can never meet their obligations once people ask for physical delivery. And that will make the situation even worse. So you will have normal increase in demand because of inflation, as we discussed, and concerns about wealth preservation. And then on top of that, you will have a paper market in gold and silver, which will, in my view, collapse. And therefore, you're going to get periods now when you're not going to be able to get hold of gold and silver at any price. I'm not being sensational. I'm just, I'm not trying to tell people that gold and silver is the solution to everything. What I'm looking at is, and I've done all my life, is analyzing risk, understanding risk. And right now, I'm saying risk is at a maximum, therefore you've got to protect yourself, and you protect that risk. And there are not many areas now where you can protect it. Bonds that are not protection or wealth preservation. Stocks are not wealth preservation. So you haven't got much left. So you have a narrow area of commodities. It's not easy for people to own commodities in physical form because you can't. You don't want to buy paper commodities, and therefore you got to own. If you want to own agricultural land or forests, etc., with direct investment, very few people have a chance to do that because they have to manage it and look after it, etc. But gold and silver, you can actually buy yourself and hold it and store it with people through people outside the banking system. So that's one of the easiest and best forms of wealth preservation. And this is what you have been, and we have been telling people, that it's all about protecting risk. People would discover that too late, sadly. And that's what we're doing our best to educate people. But as I said, only 0.5% of world financial assets are in gold today. So it's a very, very small number of people who understand this today.
Yeah, that's a great point, because I often come across people who say there's a time to make money, and then there's a time to protect what you've made. And with what you're saying, and with what we all see, it seems like that window to protect what you've made isn't getting larger. It's getting smaller, if anything. What's going to happen to the rest of these people who have made their money, but they're going to find it very difficult to move into things that can protect what they've made?
Patrick, what is so sad is when you've had, well, let's say in stocks, you've had at least since the early 80s. So you've had 40 years of bull markets, obviously with corrections in 87, with corrections in 2000, with corrections in 2007, 8. But every time so far, investors have been saved by central banks and money printing. So therefore, nobody's afraid anymore. Even last year, you had in March, you had a collapse, and the V shape, it came straight back up again. So it's been too easy to be an investor today. You do nothing and you just make money because of this printing. It just, it's not growing, as we said, in real terms, but people believe that is growing because in nominal terms it is. So therefore, sadly, just like in 1999, people were even Nasdaq had been going up for years and was still going up, and people were buying into it during '99 because it doubled in the last year again. And I was involved in a company an e-commerce company in the UK, and we had and I told my partner, who was the founder, I said, I've got to sell the company. And we sold it in 2000, and thereafter this whole market collapsed by 80%. And coming back to people, that, and of course the company that bought our company was a Nasdaq quoted company, and that went bust in a few years later. The whole, the bubbles are easy to spot, but so far they've always been repaired by money printing. I think this time is not going to happen, but people are still, this time, like every other time, they're not going to get out. A small number of people will get out. The majority will ride this market all the way down by 80%, 90%, or 95%, whatever. Certainly in real terms, it's going to go down 90, 95 at least. In 29, 32, went down 90 in nominal terms also. But this is, I see collapse of these bubble markets, and most people will have their capital totally destroyed and not be prepared, and that is in the stock market, in the property market, and in the bond market. I'm absolutely convinced very few will get into gold, and gold is too small anyway. Gold market can't swallow all of these assets. Sure, it can swallow them at $100,000 or $200,000 or more in today's terms, but that's unlikely, because there are in today's money I'm talking about. In inflationary money, we can see very high gold prices with many zeros, but there just isn't enough gold, and that's going to be, therefore people are not thinking of gold anyway. They're just going to ride the market all the way down, because they're not prepared for that this time they won't be saved by central banks.
Yeah, it's a pretty sobering thought there. Looking back at history, are we at a point in history, or are there any parallels in history with the current way the financial system is today, or the way central banks and what governments are doing, and the fall of, let's say, the Roman Empire, or maybe even the fall of the British Empire a century ago?
Well, if you look at currencies, Patrick, we know that there is no currency that has ever survived in history in its original form. All currencies have gone to zero, as Voltaire said in 1728. His expression was, paper money eventually returns to its intrinsic value, zero. That's happened every time in history. That, the Romans, for example, that was the silver denarius. It went down by virtually 100% between 180 AD and 280 AD, the value of the denarius went down by the silver content became smaller and smaller until at one point it was zero. So that happened then. It happened in France with John Law, and so throughout history we've had it with them. There are hundreds of cases of hyperinflation currency going to zero, because that's happened to every currency. But I think this is the first time, Patrick, when those incidents were limited to one country or one empire. So Roman Empire was quite big, but it wasn't the world. What we're looking at now is that the whole world is in the same situation. The US, Europe, Asia, China, Japan, emerging markets, the debt is everywhere, and the excesses are everywhere. So this situation has never happened before in history. So sadly, the consequence of that, the way I analyze risk, is that, of course, the fall will be greater than mankind has ever experienced. And that is quite a horrifying prospect, Patrick.
Yeah, it is. I suppose this is why the IMF, they've often been heard calling for a new type of Bretton Woods system. In your view, what type of new Bretton Woods system would they be looking at, or what do you think they would be trying to implement?
Well, let me start by the end and say that whatever they try to implement will fail. There is, this is you cannot, Humpty Dumpty is going to fall down and go into millions of pieces, and Humpty Dumpty will not be able to be repaired. So whatever glue they're going to use to try to piece Humpty Dumpty together again will fail, because all they can do, Patrick, is to come up with another fake currency or another form of. So it won't be paper money anymore, and SDRs are really going to be outdated in my view. So they might come up with digital currencies, but I doubt even that they have time to do that, because it'll take central banks several years. They're not ready for digital currencies today. So they'll take them several years, and before that, there's a risk that the system is already crashing. So they will come up even in today, before there is an alternative currency. They will come up with unlimited money printing, but we've just gone through that, so that's not going to solve it. So of course they will try with solutions. I don't think there will be a gold standard. I'm not in favor of a gold standard anyway, because anything that is manipulated or regulated by governments automatically will fail. And therefore, I think it would just be. I'm a great believer in free gold, that you have freely trading gold, obviously without fake paper markets in gold. But they will crash anyway one day. So you will get to a point of free gold, in my view, and silver also, of course. So, but that's not gonna solve the monetary system in the world. The way I see the world now and the financial system is that this can only be solved by one thing, and that is that the debt has to implode. This is the only way to get rid of this debt. You cannot print more money, as we just said. If you print more money, you have more debt and more debt. The world can only continue to grow if you actually get rid of that debt. And to get rid of the debt means that it has to implode in an uncontrolled fashion, sadly. And when the debt implodes, obviously all the assets that were financed by this debt will also implode. So you're going to come down to a much lower level of everything. And at that point, the financial system has to be restructured, and there'll be new currencies, and we will start at a much lower level with a level of debt that the world can actually live with. That's quite a horrifying prospect, and no one can actually predict what it's going to look like that. But and of course, people will say that, to this interview, people comment and say, he's a prophet of doom and gloom. It's never going to happen, and then central banks are not going to allow it to happen. But then they don't understand the problem. Sure, they have succeeded so far, but at what cost, and with what measures and instruments have they succeeded? Just by printing more debt and taking interest rates to zero and negative. That can never solve the problem, as we said. So yes, I am convinced that the scenario I've here outlined will happen. It's only a question of when, because I've been seeing this for the last 20 years, and we've been into gold for 20 years for ourselves and our clients, but the world is still here. So, just because we live today, we think that the things that we see and the risk we see are going to happen faster. So far, the world is still standing, but it's getting more and more unstable. I mean, the world's financial system is standing on quicksand, and therefore, it is going to implode. Whether it's going to happen tomorrow or in a few years' time, I'm not going to forecast. It doesn't matter. The risk is here and now, and that is the risk that people have to protect, in my view.
I read that you didn't have television when you were growing up in Sweden, and a person didn't need gadgets for entertainment and needs to come back to real values, not golden calf values. Now, although we like gold, although we like silver, do you have any words of advice for our audience in these uncertain times?
People must remember that, Patrick, that we've been talking about money here, but life isn't just about money. There are so many wonderful things in life, in spite of the financial problems we see, in spite of the horrible disease that the world pandemic that the world is experiencing now. And we got to, the most important things, as I always stress, is family and friends helping each other. And there are so many free things that we don't need a lot of money to enjoy. Things like, as I said, the social side, a group of family friends is the most important thing, especially in travel times. But then, we have nature, which I here spend part of the year in the wonderful nature here in the mountains. But everywhere, lakes, forests, there's nature around everyone. And then you have other free things like books and music, etc. So there's so much else in life that we can enjoy. And I think people got to, and especially helping others. So I think people must focus on that. Don't just spend time thinking about the financial system, because that's going to make you unhappy, unfortunately. So yeah, try to focus on things that are going to give you pleasure and give other people pleasure. I think that's very important.
Okay, I completely agree with that. Egon von Greyerz, could you let our listeners know more about how they can find your work and what you do over at Matterhorn?
Yes, so we Matterhorn Asset Management, or our website is called goldswitzerland.com, goldswitzerland.com, and they can go there and they'll find. So we basically help people to preserve wealth, and we have vaults in Zurich, obviously, and also in Singapore, where you are, and we have the biggest private gold vault in the world in the Swiss Alps, and the most secure. So, we for us, it's a passion to help the people who want to be helped actually to preserve their wealth. So they're welcome to go to our website, contact us, ring us, write to us, and we'll help them. Yeah. And also our interviews and videos and articles are obviously on that Gold Switzerland site also.
Okay, Egon von Greyerz, we appreciate the time you've given us, and we wish you all the best over at Matterhorn Asset Management, and let's just hope for a brighter 2021.
Thank you, Patrick. Very good to talk to you. Thanks very much.
That was Egon von Greyerz, founder of Matterhorn Asset Management. For more information of his work and his views on the economy, please visit his website, www.goldswitzerland.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. Do also check out the SBTV podcast on iTunes and Spotify.